goes down. That hippos don't fly. That the sea is blue. And that Volvos are boxy. And of course, that the world is round.
Say not the struggle naught availeth. The labor and the wounds are vain. The enemy faints not nor faileth. And as things have been, they remain. For while the tired waves vainly breaking seem here no painful inch to gain, far back through creeks and inlets making comes silent, flooding in the main. And not by eastern windows only, when daylight comes in the light. In front, the sun climbs slow, how slowly. But westward, look, the land is bright.
Sahit Hotels, being the largest privately owned Indonesian hotel company, the overall policy on service is very simple: awareness of details and true hospitality from Indonesian friendliness. ABN provides to the guests of Sahit Hotels a very essential service. That's 24-hour broadcast of the economic situation in Asia.
In Asian Market Digest today, after record losses, Wall Street rebounded in a big way overnight. All the invitation Hong Kong needed today to storm back nearly 20%. And for Tokyo to bounce back more than 3%. But all that still leaves the troubling question hanging: is today a fluke or the start of a major recovery? We'll ask the experts to find out. Hello, welcome. Thanks for joining us on Asian Market Digest. Well, a remarkable turnaround on Wall Street overnight helped Asian stock markets turn over a new leaf today. All but Taiwan and Thailand rallied, recovering some of yesterday's sharp losses. Leading the comeback today was Hong Kong with a spectacular rebound, almost 20% higher. The Hang Seng Index surging 1,705 points to 10,765. Stocks climbing across the board. Banks, properties, and China plays all gained. The notable winners: banking giant HSBC jumping 21% to 188 Hong Kong dollars apiece. Property developer Henderson Land up 18% to 44 Hong Kong dollars a share. Well, traders say the Hang Seng Index gained mostly on the back of heavy bargain hunting today. No surprise there. The Hong Kong Stock Exchange says there are more than 40 of the territory's biggest blue chip companies bought back their own shares, taking advantage of lower prices. They include Swire Pacific, Cathay Pacific Airways, Hang Seng Bank, Hysan Development, and Sino Land. They also say lower overnight interbank rates also helped to revive the market, down to about 6% today from 8% yesterday. Looser liquidity, though, did not hurt the Hong Kong dollar. It held steady at around 7.73 to the US dollar. Meanwhile, analysts say they are not convinced, though, that Hong Kong stocks are out of the woods yet. They say the $64,000 question is whether today's rally can be sustained. In the short term, investors are watching tonight's testimony by U.S. Fed Chief Alan Greenspan very closely before Congress. Well, he talks before Congress, in fact. Earlier this year, Greenspan warned against irrational exuberance on Wall Street, and that sent stock markets around the world into a tailspin. We'll have more on Hong Kong just ahead. But first, here's a quick snapshot of how Hong Kong stocks performed over the last 10 trading sessions. A bleak reminder, despite today's huge rebound, of how much Hong Kong has lost in such a short time.
Stock Watch is brought to you by Merrill Lynch.
Well, what a difference. The Hong Kong stock market staging a huge rebound today, 20% higher. You think that's good? Well, China plays also stormed back about the same. Well, for more on red chip plays and China stocks in general, we're talking to Philip Chan now. He is research director at Shenwan Securities in Hong Kong, and he joins us from our studios there now. Philip, good to see you. Thanks for coming on to talk to us today. Now, China plays, they have been, a lot of people say they have been oversold. And of course, they are better insulated or safer from Hong Kong's economy proper, from higher interest rates, etc. Do you buy that? Do you buy that story, or were they simply coming back because they were oversold?
I think they're just coming back because they're oversold. I don't think they're insulated any more than, say, other companies. A lot of them do have operations in China. But remember that Chinese interest rates are higher than Hong Kong anyway. If they're borrowing money in China, they're paying at a higher rate of interest. A lot of them are, because of the red chip stocks, I mean, they're all Hong Kong listed companies, so they may be borrowing locally. So they're going to get squeezed as much as any other Hong Kong listed company if they're borrowing Hong Kong dollars.
Okay, that sounds like, in fact, they're quite vulnerable with higher interest rates. How exposed are they to property, for example?
They are not exposed too much to property, not to the same extent as some of the, I mean, obviously the property companies plus the conglomerates in Hong Kong, but they do have some exposure. Some of the big ones like, you know, Guangdong Investment, China Resources, do have some exposure, and they, you know, for instance, China Resources has some quite big property developments in Hong Kong. Either in joint venture or itself, they will have some exposure, and so that therefore, if there's a downturn in the market, they may be affected. It depends on what their average, you know, selling price is going to be for some of the property developments that they have.
Okay. Now, on the plus side or on the positive side, I mean, this asset injection story, is that still alive? Do you think?
I think it's just taking. Sorry, I mean, I think the CSRC in China is really debating what they're going to do, really, and I think they're looking for direction from, you know, Zhurongji, who will probably make final decision on where some of these asset injections go forward, because they've issued guidelines. There's just a lot of question marks as to how to implement them, but I think the asset injection story itself is still going to go ahead. It's just a question of when it starts again.
Okay, now broadly, if an investor does like China plays, it sounds like it would pay to be selective, to be cautious, and to be careful with high interest rates, some exposure to property, and question marks hanging over this asset injection story. Strategy-wise, what kinds of China plays specifically, or what possible specific stocks should we be looking at?
Well, there's a lot of the big red chip stocks are still worth buying. I mean, we'd still look at you know, Shanghai Industrial, which came back, you know, in the free fall a few days ago, came back to as low as $15. It's not trading at that now, but I mean, that's against a price at, you know, over $50 at one time, not so long ago. We still like that one very much. It's got some strong cash flow businesses, and whilst it's not going to organically, it's not going to grow substantially. It's got those cash flow businesses. They can use that to go and buy other new companies. Other ones would be like Guangzhou Investment, Guangdong Investment, you know, China Resources. These are all good quality red chip stocks, which should go on making quite good profits.
Okay, all right, Philip Chan, we'll have to take note of that and wrap up there. Thanks for joining us. Good to talk to you today.
Yeah, thanks.
Well, that rebound on Wall Street overnight and in Hong Kong helped to jumpstart the Tokyo stock market. The gains were not as dramatic, but the Nikkei average still bounced back more than 3%, or 545 points, to 16,857. But as ABN